Castrol, that's the management that we need to speak to this morning and talk to them essentially about the business outlook that they see in the quarters ahead in lieu of an environment which has largely been favorable for them so far. So just running through their earnings and the outlook thereof, their sales growth was strong, their PAT growth was up 30%, EBITDA was also very encouraging to see. In fact, Deutsche Bank maintains a buy on Castrol with a target of 235. So joining us right now is Omer Dormen, who's MD Castrol India, to talk more about how business is shaping up. Omer, it's great to have you on the show. Thanks very much for taking out the time. Q4 was a stellar number. I mean, on every parameter. What led to this beat?
Good morning. We're really proud of recording a really strong Q4 results, and it's at the back of our strategy, which has been we're seeing a growth on our strategic numbers. And actually, if you look at not only the Q4, but if you look at 2017 as a whole, it was a difficult start to the year with the impact of demonetization as well as the GST. But then, thanks to our team's commitment, Castrol India delivered a really strong comeback in the second half. And Q4 is, as you said, by any standard, it's exceptional, but it's also building on the momentum from the previous quarter. So it's not only quarter in its isolation, but it's the second half of 2017. And I'm really pleased because that also shows that our strategy, we're making good progress around the strategy. This is the second year of volume growth, and we built a great momentum, and we have an exciting future awaiting for us because the investment that we've been consistently making behind our brands, our customer relations, and expansion of our customer base as well as customer acquisition, it looks like it's paying strong dividends, and 2017 Q4 was probably the highlight of that. And hopefully we'll see more of those quarters.
No, absolutely. Do you think that the environment is favorable with aggressive expansion of distribution network and focus on power brand? Will that continue to support volume growth for you?
Oh, very much so, because first of all, the environment in the second half was much more favorable than the first half. And Castrol is a really strong brand, and we have a strong consumer pool and market pool. So our investment behind our power brands, our personal mobility space, as well as in commercial vehicle sector into our commercial engines, it's paying dividends. And we've seen strong growth, and it's more than double digits in some cases. So we're really optimistic and confident that this will continue. And we don't expect any more external challenges or tough external challenges apart from, as you mentioned, the crude oil and the base oil increases. But those are some of the dynamics that we can quite easily manage.
Is the crude impact in complete pass-through, or in the short term you will not be able to pass on this sudden uptick in crude and you may see a drop in profitability?
So actually, if you look at 2017, base oil prices were already high, irrespective of the crude prices. Because as you can imagine, base oil has its own supply and demand balance. And we saw a big increase in 2017 in our base oil cost, input cost, and we passed on the price increases in 2017. And at the end of 2017, actually early 2018, we have taken on the price increase, and we have recovered, or we have taken action to recover the input cost increase that we expect in 2018.
In general, my understanding of the lubricant market is that cars and trucks and vehicles are getting more efficient, and as a result, the total per capita consumption of lubes and oils is reducing. Is that true to some extent?
Very much so, and this is actually our strategy as well. That's why we've been investing behind our power brands, which are the premium brands in the marketplace, which are actually supporting that change, because these are, as we can see, both in cars as well as in trucks, we see that the oil drain intervals are increasing, but they will need premium products. And the premium products are what we have and what we invest in. And we continue investing into new product introduction, and that will continue, and that's why the market is moving towards where we invest, which is again one momentum that we built over the years, and it's good to see that the market is moving towards that.
Happen to a business like Castrol when electric cars and electric vehicles will take over? My understanding of the electric car is that you don't need oil, and if that is the future, then what will happen to future of Castrol?
So this is something that we also closely interested in, but our estimate is that the impact of electric vehicles is not going to happen in the next 10 years. We still believe in the market in India will continue growing and will peak out probably after 2030. So that's why we have strong belief that the market will continue growing and we will continue taking share of this growth. Having said that, of course, we do look into beyond to 2030 and how we will play in the electric agenda. And globally, we have teams to work on it, and we look at advanced mobility solutions as well as how we play in the digital platforms.
When you're talking about potential solutions, Omer, listeners would want to know about whether or not you're going to be looking at batteries for electric vehicles.
So I won't be able to give you any further details, but we just announced actually a day ago globally that we've extended our global partnership with Renault-Nissan Alliance. And even there, we talk about looking at advanced mobility solutions together with our partner. So there will be a lot of investment and a lot of focus on how we can play together with our OEM partners on how we can create solutions to our consumers and our customers.
Everyone who's rubbishing Castrol with the view that, okay, this is disruption and cars will not need lubes and oil, those naysayers should just tame their thoughts, because you think that for next 10 years your business in India is real and you will grow.
Absolutely, and we talk about one segment, and we should also take note that Castrol plays into not only cars, motorcycles and trucks, but we also have plays in industrial and marine. So we have a strong portfolio and strong presence in all the market spaces, and we are confident that we will continue growing in all these sectors. And there will be some disruption maybe beyond 2030 in some sectors, and we have a strong brand, and we know that we will be able to play in those markets, maybe looking at a different business model. But the fundamentals of the business will continue growing, and we still have a strong presence in industrial as well as in the commercial sector, where the electric agenda will come probably much later. And we should also take note that in the near future, there are many more developments in terms of efficiency beyond electrics. Even the normal standard combustion engines, they're becoming more and more efficient. And I think one of the agenda items should be how do we play into that and make sure that we have the products to support that efficiency drive in the standard vehicles.
Omer, we wish you the very best. You've had a good quarter, and we wish that there's more to come in terms of growth and profitability for you. Thank you very much for joining us today.